Today, Bitcoin retreats after notching that new all-time high yesterday. And John Haar, managing director of Swan Bitcoin, reacts to today's pullback and what's ahead for the market in Q4. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets in the red this morning after Bitcoin hit a new record yesterday above $126,000. As of noon Eastern, it slid about 2.5%, down to just under $122,000. Ether, meanwhile, fell nearly 3.5% to $4,514, and XRP dropped more than 4.5% to $2.89. Now, taking a look at some crypto-related stocks for a moment, shares of crypto exchange Gemini got a brief boost this morning after KBW initiated coverage of the stock. The investment firm gave a perform rating and set a price target of $27. The stock turned lower by late morning alongside the broader market. Meanwhile, data center firm Iron also in the red, but at one point was on the rise after it announced a new AI cloud contract. Iron is a crypto miner that has diversified into AI and high-performance computing, a trend spreading across the Bitcoin mining space. All right, keeping with markets for our main story, Crypto World's Jordan Smith spoke with John Haar, managing director of the crypto financial services company Swan Bitcoin, to get his take on today's pullback and whether Q4 has more all-time highs in store for Bitcoin.
Bitcoin is retreating this morning after hitting that fresh all-time high above $125,000. It's the first time it's been above the $125,000 level ever. Just after noon, I believe we were down under the $122,000 mark. What do you make of this pullback? Is this just profit taking? What do you see here?
Yeah, I tend to not read too much into the one-day moves. I see risk assets in general. Stocks are down today. It looks like gold is touching 4K again as we speak. So everything's behaving a little bit differently, but the one-day moves I tend not to read too much into. I think the medium and longer term trend for Bitcoin is pretty clear, which is higher. We can get into some of the reasons why that is, but I think, shorter term, it's probably just profit taking, people thinking, okay, that was a really quick run up in just a few days, so let's maybe cool it off a bit.
Yeah, let's talk about some of those trends. I mean, one of the things that I've been watching are the net flows into Bitcoin ETFs. And over the past week or so, they have been going up. What does that say about institutions moving money around in the market? What does that say about Bitcoin and this trend that you're talking about?
Yeah, so I think just undeniably, the ETFs have been really in multiple ways you could look at it. Some of the most, and what the Bitcoin ETFs, obviously, we're talking about, some of the most successful ETFs of all time, whether it's assets under management in a short period of time, whether it's liquidity, whether it is profitability for the issuer. There was an interesting post this week that showed IBIT for BlackRock iShares, that family of ETFs, is their most profitable based on annual revenue, most profitable ETF, which is really pretty mind-blowing because they have some of the largest ETFs out there. So I think it's just undeniable that these ETFs have been a massive success. And you have to look at this in conjunction with the fact that there still are a ton of asset allocators out there who are not including the spot Bitcoin ETFs for their clients for a variety of reasons, whether that's Vanguard, other investment managers, in the financial advisory world. They might allow it technically, but then if you kind of peel behind the curtain, it's really limited, the set of clients that they offer it to. So there's a lot more to be done here. Vanguard, just in the last week or two, there was a report that they are looking to lighten up that restriction on Bitcoin ETFs. I haven't seen great confirmation from Vanguard that they're looking to do it, but that is out there. And then you also have JP Morgan and Morgan Stanley coming out with positive takes on Bitcoin just from an investment perspective. Again, I think more things have to happen before financial advisors at those companies are outright putting their clients into the ETFs. But all the wheels are in motion, and I think that's the path that we're on.
Yeah, I see your point about IBIT specifically. I believe it's nearing $100 billion in assets under management, which is just huge growth for that ETF. I I guess I want to ask more about this work that needs to be done to get institutions to buy into crypto more, specifically with the ETFs. You're saying that there's more that needs to be done. What is it that you see that needs work? I guess is it educating investment advisors? Is it educating these institutions, or is it just wait and see?
Yeah, I think it's a mix of educating the institutions at the senior level, also educating the institutions at the advisor level. But then the real shoe that needs to drop is the institution itself needs to kind of open the doors for advisors to put their clients' funds into the Bitcoin ETFs. So right now, there are still a bunch of restrictions. It might say, hey, you can have a client buy one of these spot Bitcoin ETFs if they come to you and sign something that says they want the highest risk account or something like that. So that's not really going to put a ton of assets into the spot Bitcoin ETFs. The other end of the spectrum would be that an advisor can just have the discretion to say, okay, my client has a pretty balanced growth portfolio, something like that. I'm going to put 2 to 3% into Bitcoin via one of the ETFs, and that's a prudent thing to do. We have not gotten to that other end of the spectrum. So yeah, I think it's a mix of education. It's a mix of just time going by and Bitcoin, being what it is. For the last 8 out of 11 calendar years, it's the best performing macro asset. If this year keeps going the way it is, gold is beating it right now. But I'm kind of laughing as I say that, because if gold is number one and Bitcoin's number two, then you're kind of pointing to the same thing. It's this debasement trade that JP Morgan has talked about. So yeah, I think it is kind of a slow drip, but then we'll have announcements as time goes on. You'll see some big investment firm kind of open the doors, and then I think it'll be a domino effect and more institutions will do it.
Going to some of the other trends that we're watching, I spoke with Lale O'Connor of eToro yesterday, and she emphasized just how much the macro picture is back in focus for crypto investors. I'm curious where specifically the government shutdown fits into that, because historically markets have kind of shrugged off the economic impact of these shutdowns. Is that true for Bitcoin? And does this current shutdown that we're in play into markets at all?
Yeah, I tend to say that government shutdowns like the one we're experiencing now tend to be either shrugged off, as you said, by Bitcoin investors, or if anything, viewed as a positive. And it may sound odd to say that, but I think the way it could be viewed as a positive is that Bitcoin investors will say, okay, this is just another item causing fiscal uncertainty. And likely most of the government shutdown outcomes have been they agree to spend more money. And, there's kind of a song and a dance that happens before it, but the end result is, okay, we're going to end up spending a bunch of money on some variety of projects. So that's where I think this one will end up. So I think it really just highlights the value of an asset like Bitcoin or like gold that's outside of the system and benefits from all that extra spending and monetary debasement.
The other thing that's coming down the pike is, of course, rate cuts. There's another one expected this month. You have some expecting as many as 5 total through next year. And obviously, rate cuts are good for crypto in the past, but how much of that is priced in already? And will we see these run-ups for Bitcoin or altcoins driven on rate cuts as they come in?
Yeah, so this is an interesting one. I tend to think that rate cuts are a small factor contributing to Bitcoin price appreciation. And even just risk assets in general, Bitcoin price appreciation, equity price appreciation. I don't think we're in an environment where a 25 or 50 basis point rate cut to the Fed funds rate matters too much. I don't want to say it doesn't matter at all. I do believe on the flip side, in 2022, that rate hiking cycle certainly did harm equity markets and Bitcoin markets. But that was also a rate hiking cycle that happened the fastest in history. And it was in response to inflation that was the highest in at least 40 years. So that was pretty dramatic. I think the cutting cycle this time is not going to be dramatic. I think it's going to be, we've already seen a cut here, cut there, then they pause for a little bit, revisit. I think it's going to be more like that. This is not going to be a cutting cycle like we saw in 2008, response to a massive crisis, or 2020, response to a massive crisis. Cut rates to zero, keep them there for a really, really long time. That's not what I'm expecting. That's not what most of the market is expecting. So I think it's incrementally helpful for risk assets if they're cutting rates. And by the way, it's not just the Fed, it's most central banks around the world are engaging in a cutting cycle right now. So I think it just adds a little bit of fuel to the fire, but I wouldn't say it's the top thing driving the price of Bitcoin right now.
Okay, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.